Assalamu alaikum. Thank you very much for joining this corporate briefing for Bata Pakistan Limited. With me for the introduction, my name is Fahad Mohammad Fahad. I have recently joined Bata Pakistan as the CFO. With me, I have Mr. Hassan Umar, who is the CEO of the company and country manager for Bata Pakistan Limited. Yeah, so before we start, I would request Mr. Osman to recite some verses from the Holy Quran.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد صدق الله العظيم.
Thank you, Osman. We can start with the slides presentation now. Yeah, a bit of an overview about the global footprint of Bata. As some of you might not know, Bata is a global brand. It is currently operating in 56 countries worldwide, which includes some countries in the Asia Pacific, Southeast Asia, Africa, European markets, as well as Canada as well. It employs about 32,000 employees globally, with 17 factories worldwide and 5,800 stores. It's a family-owned business. It just started its operations about 30 years back. Has a very interesting story about it as well. So from the global footprint, we move on to the footprint in Pakistan. Yeah. So this is the footprint of Bata in Pakistan. Bata started operating in Pakistan in 1942, and it was incorporated as a Bata Pakistan Limited in 1951, and became a publicly listed company in 1979. So Bata has been operating in Pakistan for 77 years now. Right now, we have more than 350 owned stores, as well as the franchise and wholesaler stores across the country as well. With that, we have e-commerce platform and a marketplace arrangement as well to sell our products across the country and to across the consumers as well. Along with that, Bata is operating an international program for Bata for Children, which is a CSR activity for Bata. We will go into the details of the program in the upcoming slides. This is the Bata manufacturing footprint. As I mentioned, Bata was established in 1940 in Batapur. Maratha factory was established in 1985. Total capacity is about plus 11 million pairs. And recently, we have announced the consolidation of the manufacturing facility of Bata. So the manufacturing facility, which was operating in Maratha, is going to be merged with the manufacturing capacity of Batapur. And then there will be further investment to modernize the factory altogether. So this has been approved by the board of directors and has been communicated to the stock exchange as well. In terms of the geography of the retail footprint, so we have our own stores all across Pakistan. As you can see with the map as well, we are operating across all the 5 provinces. And then when you look at the franchise footprint, so our strategy is that in the tier 3 and tier 4 cities or the towns where we are not able to open our own stores, we go for a very profitable model of franchise of shops over there, which is mainly focusing at the moment within Sindh, Punjab, and KP. These are the new stores, as you can see from the pictures. This has been part of the strategy of the management that we're looking to modernize our stores, increase the customer experience. As and when needed, we move the store location as well. And in terms of the ROI as well, if not needed, then we can close down some stores if and when needed. So as you can see from the pictures, these are the latest stores being opened or renovated stores at the Bata across the country. And then these are the new franchise stores. As I explained that in the towns or the cities where it is not feasible for us to open our own stores, we go through the franchise model. And as you can see, even the franchise stores from a look and feel wise look quite modern and up to the standard of Bata. These are the CSR activities. I mean, quite a lot of activities I've mentioned over here. But if I were to summarize, we are looking into the different angles of the CSR, which include the investment into the youth as well, upskilling them, doing the mentoring about IT and digital literacy, as well as the health and well-being of the patients and the employees as well. So do we are doing the annual sports day activities and then volunteering into the blood donation camp as well. All in all, it's part of the Bata global program, as I mentioned, Bata Children's Program, where we are focusing especially on the development and CSR activities targeting the children of Pakistan. Yeah, these are some of the summary of those activities which were carried out in 2025, and some of them are continuing in 2026 as well. Then we move on to the financial information. So in the year closed 2025, the turnover was -3% versus last year. Majority of that was driven by the drop into the exports and the wholesale business, while the retail business reduced by 1.5% in 2025 versus 2024, which is our main or the core business of Bata. Which is driven by a very competitive landscape of the category of the segment we are operating in at the moment. A lot of new players have entered the market as well. But within that 2026, our focus has been that we regain the growth momentum for the company as well. In terms of the gross profit, the significant decline over there, it's mainly driven by the one-off entries or one-off adjustments we had to take within the year of 2025. Reason being that we produced some of the inventory in the previous years with the expectation of certain sales, which we couldn't liquidate at the right time. So we had to take a provision against those inventories in 2025, as well as some of the receivables, old receivables that we had in our books, pertaining to some tax refund from the government, as well as some receivables from the wholesale business as well. So these one-time adjustments were taken into the year ending in 2025, and that has impacted our gross profit percentage as well as the P&L and the earning per share as well. Yeah, I mean, that's the future outlook. Asanta, we want to speak about anything on the 2026 goals that we are setting.
So basically, for 2026, we will be driving our turnover because the main difficulty that the company was having in previous years was related to turnover because of a lot of competition, as Fahad has already explained. So we, as a group at the global level, have decided that Bata has to regain its market share. So in regaining market share, we will be investing a lot in our marketing. We will also be investing in bringing flagship stores. We will focus on improving customer experience. We will also focus on optimizing our cost structures. So, and our expansion will be driven through franchise business and e-commerce, which we call FA2A. FA2A means from anywhere to anywhere. So this is omni-channel concept, as all of you know, and we will be focusing on improving our customer experience through digitalization. So this remains. Now we are repositioning our brand as unreasonably good shoes in the market. This is the global direction. Being a part of a global network, our strategies are determined by the global strategies, and then we localize them in our own environment. So this unreasonably good shoes is the new positioning that is coming from the global direction, and we will drive this in our marketing campaigns, and we will build a story around it. That what do we really mean by unreasonably good shoes? So that actually means that we will be good in everything that we do, be it the product, be it the marketing, be it the supply chain, be it the people strategy, talent acquisition, and everything. However, because of the inflation, we foresee that there will be pressure on the margins. Because of the competition, there will be pressure on the margins. So that one area will take some time to address. But as we will fix the basics and we buy the market share from the market, we are confident that gradually it will start translating into our margins and the bottom line also. Over to you, Gaurav.
Thank you, Mr. And apart from the opinions, we will be continually investing into the people as well. We are modernizing our organization as well as the sales chain as well. As Asanta mentioned, that e-commerce and digitalization of the organization is a key pivot required to expand our network. So we'll be focusing on that as well, along with the continuing efforts toward the Bata for Children program and CSR activities. That pretty much summarizes the brief from our side. We are happy to answer any questions if you have. Yes, sir.
Hello,
We
Sami. Can you hear me?
Yeah. Yeah, we can. Yeah.
Okay. So I have a few questions related to the movement of the capacity from the Multan Road factory to the Bata port. So will the total capacity remain the same after this transition, or are we expecting the total capacity to get reduced? The number of shoes.
Yeah. So yes, in terms of all the production machineries will be moved towards the Bata port. So capacity will remain more or less the same. Of course, we will rationalize in terms of the demand of the lines of the product because, as you would imagine, we produce some of the products are produced in-house, and quite a lot of them are bought from a different suppliers as well. But as per the plan, we will be moving all the production machineries from Maraka factory to Bata factory.
Okay, and then what about the workforce in the factory? Are we expecting any reduction in the workforce as a result of this transition?
Yes, so at the moment we have offered all the workforce to shift from Maravka factory to Batapur factory over here, along with the BRS scheme as well. So the workforce who is not able to move over here for the work, they can opt for the BRS. Otherwise, we are offering the employment to all the workforce which is currently working in Maratha. Right now, the talks are going on with the workforce over there.
Okay, okay. And then the final question is regarding the factory area. What is the land area that you have over there, and what is the future plan of, let's say, once the operations are consolidated in Bata Port? So, what is the plan for this land? Because it seems that there is a housing society nearby as well, and a lot of warehouses on this road as well. So, what is the company looking to do with this piece of land?
Yeah, so because the land is owned by the group, the Bata Group at the moment, it is yet to be decided by the board, the global board of the Bata. So they're looking at the real estate of Bata across all the markets currently. So they will be making a decision about it, that whether we're gonna make something on this land or they'll be selling it off. So it will be a decision with the global board.
Okay, and what is the area, total area of this land or the Multan Road factory?
I can check it in my file. I don't have it on top of my head.
Okay, that's all from my side. Thank you.
Yeah, someone else has a question as well.
Rafaqat Malik sir, please ask the question.
Sir, please share.
जाहिद साहब आप क्वेश्चन पूछ लें जो पूछना है आपने।
जी, am I audible जी?
Yes.
Yes.
Ji, I have a few questions. The first question is that you have mentioned competition, gaining market share. Um, you also discussed this in your director's report as well. So my question here is, how did you lose market share in the first place? What is the current status? And also, there's another footwear company, Service Global Footwear. They have started joint venture with Chinese partners. My question is, would that affect you?
Yeah, I mean, essence of things.
Yeah, so basically, let me first address your question related to how the company lost market share. So the short answer to this is that last 5 years post-COVID were uh, mostly the company's focus was on uh, optimizing the cost and ensure that the bottom line improves. So this was the focus. And the focus was also on not expanding through expansion of retail network, but through alternate channels. But unfortunately, that strategy did not work. We were not ready as a organization with the technology tools to grow through the e-commerce business. That was one. And secondly, because of a lot of pressure on costs, we didn't invest enough in our network and we closed a lot of stores. So these were the main two reasons because of which we didn't gain market share, rather we lost market share. And another factor was that, as you have mentioned, that service and Endure, these two competitors had very aggressive growth plans. And also Stylo also came on board with them because they also had a very aggressive expansion plan. So service from a stores or store base of 50 went on to set up a store network close to 300 and they were also rebranded. So the average age of these two networks was, I would say, 3 to 4 years, whereas Bata had an average age of more than 9 years for the network. And Stylo also took the route of aggressive expansion. So these three players were very aggressive, and then there were new entrants also, which invested a lot. And then the apparel players, such as the Cardi and Sapphire and all these players, they also entered into footwear. So I would say that there was so much competition. The competitors were far more aggressive than we were. And as I said, that our strategies are determined by the global organization that drives us. So over there, depending upon how the company looked at its total global footprint, the idea was to optimize and invest in technology. But that didn't work in the Pakistani market because our market, as far as footwear is concerned, is very, very dynamic and very competitive. And
Ji.
your second question was?
Ji, I have two more questions. My second question is regarding the payout ratio. If you look at your payout ratio since 2017-18, so heavy payouts, which were more than 100%, on occasion it was 150% as well, has reduced your balance sheet equity from 7.5 billion to 3 billion. So my question is, at this level of equity, and given the competition, etc., what is the outlook on your payout ratio? And my second question is, yeah, given the explanation of competition in the market, is this income statement structure of 45% gross margin and roughly 10% net margin, can the situation return? I mean, can we go back to the situation where your gross margins were roughly 40-45%, net margin was 10%? Do you foresee to reach this level soon, within a year's time, 2 years' time? These are my two questions.
Yeah, so regarding the gross margin, yes, we can go back to the level because, as I said, in 2025, we had to take a one-off provisions for a slow-moving inventory for a bulk of our inventory, I would say, which fell into the year of 2025. Since we have cleaned up most of that in 2025, and with the channel mix as well, because we are pivoting more sales from wholesale to the retail channel back to the retail and the e-commerce channel, which is more profitable, more healthier gross margin channel for us. So we are looking for the improvement in those channels as well as we had to take some necessary price adjustment to the products as well, given the inflationary environment in Pakistan as well. So these measures should increase the gross margin.
So I will like to respond to an earlier question, which was about the area of the facilities. So our Maraca factory, which we are closing down, has a total area of 9.8 acres, out of which 2.29 acres is vacant. Whereas our area for Batapur plant is 85.7 acres, out of which the vacant area still that we have is 19 acres. So we have plenty of space and constructed area available where we are shifting the Maraca factory to Batapur factory. Ji, please go ahead, ask the question. You can unmute yourself.
Hello, Assalamu alaikum. Am I audible?
Yes, yes.
So I have a few questions. Firstly, is regarding your renovation of stores and opening of new stores. The company nearly spent around 560 million last year in this process of renovating stores and opening new ones. So is this revamp process now complete, or is the company expected to incur further expenditure on it?
Yeah, so the renovation is very much an ongoing process. Of course, as I mentioned, we have a network of more than 350 stores across Pakistan. Not all these stores can be renovated in one go within 1 year. So this is an ongoing process. So a short answer to your question, yes, we are still investing in these renovation of the stores, even in this year as well.
So are you targeting any store size, like how many stores are you targeting to open in this year? Is there any target?
So basically, the issue is that we feel that we already have stores more than what is required to uh, appropriately reach the customer in the Pakistani market space. So the company's strategy is to optimize it. So what the strategy is that we will be closing stores that have become irrelevant over time, and we will be shifting stores to better locations and better markets. So as a result, our turnover per store will increase. So we will be opening stores that will be have better covered area, better selling area, better stock area, where we can give a better experience to the customer. So this is going to be the strategy. So maybe the total number of stores will reduce, but the turnover per store will increase, and our stores will become more relevant into the markets that are more meaningful, where the customers love to go. So those are the places where we'll be shifting our stores.
Okay. So my second question is regarding your shift in the wholesale segment from the credit side to the cash sales. Is this now a permanent policy, or it was just a temporary measure? So if in case it is permanent, what is the strategy of the company to rebuild this top line?
So basically, wholesale channel in Pakistan traditionally has been operating on the credit model. But as an industry, all the players have experienced over time that this is not workable anymore. So Bata has taken the lead in converting it to 100% cash. except for B2B customers like government departments or reputable corporate companies, or let's say the modern trade outlets where we sell our products such as Carrefour or Metro or CSD. So there we continue to give credit, but with discipline, with clearly defined agreement and credit terms. But for the distribution side of the business, traditional wholesale side of the business, we have completely abolished the credit sales. And likewise, other players in the industry are also following us because this channel is no more attractive with a lot of Chinese products in the market and a lot of counterfeit products in the market. So we are taking exit from this wholesale business in the traditional way. Now we are approaching this business in a more professional way, where we will control the distribution ourselves and we will follow the principles of key account management with multi-brand outlets. So we will continue to address the market needs, but not through wholesalers or distributors, but through self-distribution and more digitally enabled business model. So this is what we will do. So another thing is that we are expanding our franchise network, which is cash franchise network. We are expanding our e-commerce network because we have made necessary investments in technology. And then the final thing is that we will also be invest more in technology in managing our B2B business. So this is the long-term direction.
Okay, thank you. My last question is regarding your decision to consolidate the factory operations. It is scheduled to be complete by July 15th. So is the progress on track? Furthermore, what are the plans for the Malacca factory property? Like, will it be rented or sold? Like, can you please elaborate on that?
So this is already addressed by our CFO, Mr. Fahad, that the plans, the future plans for the location itself, that what will be the future for the location of Malacca that we have located, that rests with the global management to decide. So we are not sure what plan they will have. But the process, as you said, that what is the status? So it is just in the preliminary stages at the moment. We have just announced it, and we are right now talking to or explaining the process to our employees that how this process will go on, and then there's a lot of construction and installation of machinery, etc. So this will take some time. So it's just in the beginning, just in the initial stages at the moment.
Okay, thank you so much.
Next question.
Yeah. So I have just one more question, and that is regarding the franchise store network. So you've said that you have currently 350 stores. Now, I was just wondering how many of those 350 are basically franchisee stores, where the franchise model is being used.
So 350 stores that we have mentioned are the company operated stores. These are not franchise stores. Franchise stores are on top of that. So we have approximately 100 plus franchise stores. These are cash franchise stores.
Okay, thank you.
There's a question in the chat as well.
So you can
Yeah, so online sale is about 600 to 700 million per year.
revenue expectation in terms of growth and gross profit margin. Yeah.
Question now. Kindly guide about 28 Yes, I think in terms of 2026, for the turnover growth, we are in line with our target at the moment, which is growing about 7% for last year. In terms of the revenue expectation, this is our full expectation as well. Gross margin growth, I can check it for you. What is the target? Gross margin different from group to the
Last year 39%. This year 45%.
and absolutely not the percentage.
So they are calculating for you for the question that is in the chat. So
In the meantime, maybe if I can slip another question, uh, which is regarding the first quarter, not the last year. So I was looking at the accounts, and there has been revenue growth in the first quarter year on year. And given that Eid also, falls in the first quarter, it also fell in the first quarter in last year as well. So I was wondering why the GP margin actually went down, because this is the main season, right? This is the best quarter of the year.
Yes, I think reason for the GP margin went down is very similar to 2025. There was still some defective inventory. Which was unearthed during the stock count during the quarter one. So we had to take a relatively sizable provision against those defective inventory. So the focus in our first half is that, and even 2025, we clear off any slow moving inventory, which is sitting in our retail stores and warehouses, so that we can do a fresh start in terms of the gross margin percentage. So that was a big driver of the reason of a lower gross margin quarter one as well.
another thing that I mentioned earlier when I was explaining the future outlook, that the pressure on the gross margin will continue for some time. Because of the consolidation that is going on, we are merging factories. So we are, making some alternate arrangements. We are working on overtime in the other factory. So this is really not an ideal situation to optimize our gross margins. But as I said that in the year 26, we will be working on the fundamentals for the company. Since it is now from now on, we will be on a growth trajectory. So we will be investing in driving turnover. So once we invest in margin, once we go for the turnover, we have to invest in the margin. So you cannot expect to grow your turnover without having hit on your margin. So we will be aggressive on marketing, we will be aggressive on pricing so that we regain our market share. But once we regain our market share, we have our factories consolidated, we have control on our costs, we have gotten rid of the old inventory and inventory that is not fresh. So this will put us in a very solid position to drive growth in coming years and also register good EBIT and gross margins. So if you ask me, 2027 will be the year where Bata Pakistan will be delivering very strong financial results. So 2026 will be, again, as you see, we have a VRS scheme going on. So this will be a one-time cost that will also hit the EBIT. So this year is where we are taking corrections. So let's put it that way, to be transparent and to set the expectations right. The turnover we will be growing, but gross margins and EBIT not that much, because here we are taking a lot of adjustments and a lot of corrections. Gross margin. Okay, so in the chat we have given the response for the question in terms of gross margin. There are no further questions.
Yeah, if there are no further questions, then we can wrap up the briefing. If you have any further questions, yeah, please feel free to ask. Yeah, then we can wrap up the briefing now.
Ji, I had an earlier question regarding the payout ratio. What can we expect in terms of payout? Could you kindly give us a brief on that, please?
You mean the dividend payout ratio?
Ji, the dividend payout ratio, which was very high in the past, but given the competition and situation the CEO has explained, what can we expect? Can we expect 60% payout ratio, roughly?
Not as Mr. Ashansi explained that this year we are looking to grow the turnover and then reinvest the margin into the business bit more this year. So the EBIT growth will be lower compared to the turnover growth we are seeing. So the dividend payout ratio, we're not expecting to be high this year.
Okay.
It will be more reinvested back into the business as we are renovating the stores in terms of cash being spent into the expansion of our retail footprint or modernizing them.
Okay. And could you kindly give us what will be the expected amount of savings due to the solar installation?
Solar installation has happened like 2 years back. It's not a new
Yeah, so solar is an old phenomenon. We have 1 megawatt solar installed at each of our locations, but now since Morocco is moving here, that 1 megawatt is currently installed at Morocco will be shifted to Bata, and I think we can have some additional savings because of this one additional megawatt coming in here. But since the tariffs and everything and all the government is going to look at it, 1 megawatt is already the ceiling. So what additional benefit will come from it, we still need to calculate.
Okay, thank you so much.
Okay. Yeah, if there are no further questions, then we can conclude the briefing now. Thank you very much for joining us. And yeah, we need, yeah, we didn't receive any advanced questions for the briefing. We've answered most of the questions about the energy mix. We can check with the relevant authorities and come back to you on that. Yeah, then we can conclude the call. Thank you very much for the dialogue.